Good day, everybody. Today is Monday, March 30th, 2026. Our first headline today, S&P 500 falls to 25 basis points from correction. Bonds diverge. Although opening 0.33% higher, the S&P 500 closed 0.4% down for the day. And from the all-time high 9.75% intraday, 25 basis points away from our official correction territory. Once you get to 10%, the question then becomes, are we going down to 20%, which is considered officially a bear market, as we've already seen in the Dow and the Russell. From the beginning of March, TLT, my favorite place to be, has been falling with stocks. Today, notably, TLT rose 1.33%, with the stock market going down. So, as I've been talking about on the show, I've been expecting an eventual break between the correlated state of bonds and the S&P 500, and we got a big day looking exactly like that, at least for today. I was able to predict this coming specifically for this week, lower yields, I said on Friday's show, partly because we had a major divergence in the RSI with TLT, with 3 lower lows in the price and those lining up with higher lows in the RSI. Very basic RSI divergence formed. And with today's rise, with the stock market falling, this could be a trend change. We could have TLT continue higher as the stock market goes down. We finally saw money stop selling absolutely everything on Friday, with gold going up. I said on Friday, I think bonds are next. And yeah, so here we are. Adding to the case, there was a big tail on the 10-year, suggesting maybe a top in yields. And yeah, we fell 8 basis points today in the 10-year. And in the 20-year, same thing. We dropped 7 basis points after hitting these pretty epic trend lines going back to 2023, of October of 2023 to May of 2025. And also these bottoms here, September 2024 to April 2024 to the high of January 2026. Major resistance area alongside all these tops where the purple boxes. Now, doesn't mean we can't go higher still in yields. I'm not saying we can't go higher. After all, we went up and we're consolidating. If this continues to consolidate, we could continue higher in yields. So we'll get through more charts and details after our community topics. Before we get there, second headline today, dollar index highest in 1 year. Dump your fiat currency, especially the dollar. The dollar's going to zero, says everyone wants everyone, including a lot of Americans themselves. After all, inflation is the grease that keeps the economic wheel turning, but the dollar is going higher. It's at the highest, the dollar index DXY, the highest it's been in a year, about a year, almost a year, since May of 2025. Bearish sentiment on the dollar, I think, often peaks with peaks in gold, 1980, with inflation getting insanely high, something like 15%, I believe. Gold hitting a peak, but then what happened? Gold didn't see the same price for decades, alongside yields falling for decades. This is a good point to remind everybody, too, that if you don't count total M2 money supply and just to take a look at how many actual dollars exist out there, it's about 3 trillion. Interestingly, around the same market cap as the peak in Bitcoin recently. I don't know where it'll go from here, but I know it can go up and I know it can go down. Third headline today, news headlines. Crude oil is still really high. The conflict in Iran is, the betting markets aren't seeing this over until at least the end of May by a 50-50 chance, only a 71% chance by December. We have this headline from Financial Times. Trump hails progress on Iran deal but threatens huge infrastructure attack. Warns of hitting on oil wells. Another headline that really caught my eye today was the Daily Shot. Finally, someone else talking about the tips market. Right here, the 30-year tips real yield hits its highest level since 2008. What they're talking about here is the fact that inflation right now is a lot higher than what is expected compared to what you can get in the Treasury inflation protected security market. In other words, no one thinks they need inflation protection, which is interesting because, this whole narrative with gold going to the moon and potentially going higher has all been around the story of inflation, but there's a market that prices this directly. It's the tips market. And this is why I bring these up on every show. The tips market is not going to the moon. The 5-year break-even inflation rate today, rising 1 basis point to 2.57, for example. The 10-year going flat today to 2.31. If market participants were truly concerned about inflation continuing higher and higher and higher, there would be a higher bid for the tips market. And the break-evens, they do go up and down, but I want to note again, since March 18th, the break-evens have actually been falling and going lower, flat today. So even though inflation is high now, the Treasury bond market isn't worried about it. Once again, adding to my case that, TLT is my favorite place to be. Anyway, moving on, community topics. What moves, if any, did you make today? Did you buy anything? Sell anything? Love hearing the discussion in the comment section below. Wednesday this week, we have ADP employment. We also have Thursday jobless claims. And Friday, a big unemployment report. What I'm particularly looking out for and trying to keep an eye on are the revisions. They've been getting swept under the rug. It seems like nobody notices them anymore. Imagine if we get a bad employment report and then it gets revised further bad. I could see that coming. Also, when is the war really going to end? When will the Strait of Hormuz actually open? We have no idea. And the Trump tariff saga, no updates. If the stock market continues to fall, like I said on Friday, maybe zero tariffs and stimulus checks coming. I don't know. Thanks for watching, liking, subscribing, sharing, commenting, and all of your support. It is all greatly appreciated. On to the charts. Back to the S&P 500. Like I said earlier, we opened 1/3% higher. It looked like, hey, maybe this was going to be like a area we settle at. And we sold through the day, reaching an intraday low from the all-time high, 9.75%, notably. RSP equal weight also fell today, so it was a broad sell-off, although when looking at the heat map, it was a bit of a churn, a bit of a mix. You can see certain areas actually were quite green, like the financials. Semiconductors got hit the hardest, it looks like, with NVIDIA's funeral continuing to the downside. XLF, the ETF of financials, actually rose by 1.15% today. Usually when yields are going up, XLF goes up with it. But now we're in a situation where, or rather, yields have been going up while XLF has been falling because of higher default risk. So maybe with yields backing off a bit, XLF can get a bounce. SMH, the semiconductor index, fell 3.13% today, quite a good amount. Similar to XLF, we're at a 15% discount to the all-time highs. Everybody feels FOMO up here, but once it falls, nobody wants to buy it. So where will this bottom? How far will SMH go? I think it can fall a lot further because the earnings ratio of this entire industry has just gotten ridiculous, but it doesn't mean it can't get more ridiculous. I don't know where the bottom will be. And I'll add, follow the semis as a common adage in Wall Street. When the semiconductors are falling, it suggests that the whole market can follow it to the downside. WTI, crude oil, still elevated, 104.89. Brent at 107.39. The NASDAQ, the Q's also in correction territory, now 12.3%, down from the highs. IWM small caps fell 1.44% today, also almost 12% down from the highs. The VIX, very elevated, we're at 30.62. This is the second lowest the second highest close that we've had in this entire volatility area. So volatility is very high. If you think things are getting bad, they can keep getting worse. The VVIX is also very high today at 127.84. Importantly, a high VIX means that the price of options are higher because bigger moves are expected. So the S&P 500, it can go up a lot further. It can go down a lot further. Same thing in the MOVE index. The MOVE is the measure of the volatility of bonds, still also very elevated. Even though bonds went up quite a lot today, the MOVE index is staying elevated, but its area of elevation can also mean that bonds may be ripping higher instead of climbing higher or ripping to the downside. But in times like these, I mean, you can't be surprised about anything that's happening in markets, especially with all this geopolitical stuff going on. It's very exciting, at the very least, to be watching markets right now. The 2-year note yield, Treasury note yield, fell today by 8 basis points after recently peaking around 403 and closing today around 384. Bitcoin's still about 50% off of its highs. Again, if you loved Bitcoin when it was over 100,000, I mean, then you should be buying it hand over fist right now. I love how no one wants to buy Bitcoin anymore, because that's how market psychology works. When something goes down and nobody wants it. Anyway, over the weekend, we've developed a short-term little bearish flag-looking thing here. We've broken down now below this upsloping trend line that we had before. So now we're looking to see if we can break this bottom area that we had on February 5th and 6th of 2006. Can we get below 60,000, for example? It looks like we're headed towards that area at the moment, and so I guess we'll see. On to metals, copper. Dr. Copper with a PhD in economics, not really doing much, going basically completely sideways, alongside gold now having gone sideways for quite a while after falling since the beginning of March. That was silver, sorry. Gold, but doing the same thing, consolidating, going sideways after falling from the beginning of March. Sector-wise, XLE, the energy ETF, actually fell today by about 1% after opening higher. Discretionary, consumer discretionary, XLY, went completely flat today, dropping 2 basis points. Healthcare rose 40 basis points today. Consumer staples actually rose by 12 basis points. Utilities rose today by 0.72%. Also, I noticed ARK-K, innovation fund, the Cathie Wood, famous fund that outperformed everything in the post-pandemic bubble. It is not getting a bid here either, falling to the lowest price that we've seen since June of 2025. I wanted to bring up MSOS, the green stuff ETF. I talked about recently on shows how we were just winding up so tight here, and it looked like we were going to break out. I didn't know if we were going to break out to the upside or downside. Looks like we're breaking out to the downside so far. One of the holdings of the Robschild portfolio, BETZ, sports betting and iGaming ETF. It's currently down 50% from its highs, which automatically give me a bias of being like, hey, should I be buying this? And today we are reaching back down to this trend line that I've been talking about, dating back to the bottom of 2020, September of 2022, connecting to October of 2023. We're there right now. So I have no idea how much this industry should be worth. I know it's not worth nothing, allowing people to gamble on their cell phones, and it's 50% off its all-time highs. So it catches my interest at the very least. Nvidia, the king of the stock market, is dead and still falling 1.4% as mentioned earlier. And if you just look at the chart, even if I just take off all of the drawings here. I mean, this is what people are looking at when they're looking at their stocks and Nvidia. It just looks like it's going to keep falling. That's what Head and Shoulders tops do. They make you feel like it's just going to keep falling, and it can fall a lot as its current price is not supported by its current earnings. Like, yeah, okay, if it continues to grow its earnings and we expect the earnings to keep going up, then sure, but the potential downside is very, very large for this company. And being such a ginormous market cap part of the S&P 500, it can really take everything with it, which is kind of what I see going on right now. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching and see you next time. Robschild.